I'd like to go back to that chart, government spending as a share of the economy, and have that posted. And the Congressional Budget Office puts this together every year, and they project, Mr. Chairman, the point at which the general fund transfers to entitlements equal the total tax revenue, for the Federal Government. And I would just ask you, is this projection sustainable? Is this situation sustainable?
No, I don't think it is.
And what impact might continuing on this trajectory have in terms of interest rates? Say for a minute that the bond vigilantes start to turn on us the way they did on Europe based upon the projections. I mean, what potential impact could that have on costs of borrowing?
Well, if market participants are not persuaded that the United States is on a sustainable fiscal course, then eventually something will give. And that could be a financial crisis. It could be something else.
And since this is the projected budget, I mean, what do we do and what responsibility do we have in order to elevate this issue and get Americans and get the Congress to realize the necessity of dealing with reform on this front?
Well, it's one of the most fundamental responsibilities of the Congress and administration to manage our finances. But as I indicated in an earlier question, it's obviously politically very difficult, and that's what you have to confront. And part of the problem, I think, is that the public may not fully understand all the issues, and they need to be further educated.
And that's why I think part of the responsibility lies with Congress, also lies with the central bank, also lies with the Federal Reserve in terms of demonstrably explaining to the public the consequences of this. And your colleague, Mr. Draghi, the head of the ECB, he made headlines just last week. He said he had some very harsh words for member countries of the ECB. And he said there is no feasible trade-off between economic overhauls and fiscal belt-tightening. And he had some very damning words also for the future of the European welfare state. I'd like to get your thoughts about Mr. Draghi's comments, and also in light of the 2012 projected deficit for the United States. It's 8.5% of GDP. I'm looking at these numbers, for the nations they call the pig nations. It's comparable, or maybe a little worse in some cases. So, looking at what you describe as the sizable structural budget gap under current policies, and looking and beginning to compare that, I'd ask structurally, is there any material difference between us and these nations, or is it simply the markets turned on Europe? The markets have turned there, but they haven't turned yet on us. Let me get your thoughts on that front.
Well, there is an important structural difference in Europe in that they have a common monetary policy, but they don't have a common fiscal policy. In the United States, if a single state is in fiscal stress, Social Security and Medicare payments still get made because they're done by the Federal Government. There's no equivalent of a Federal Government in Europe. And so part of their reform process is seeing to what extent there should be greater fiscal union. Overall, it's true that Europe doesn't have a bigger deficit than we do. So that's certainly true. All I can say is that Mr. Draghi certainly is right at least for the peripheral countries like Greece and Portugal and Ireland, which really have no alternative but to tighten belt immediately. There may be more flexibility in other countries.
Okay, I understand that, but with our debt to GDP now over 100%, with these comparable short-term annual deficits when we look at Europe, with comparable structural deficits, at what point do our general calls for debt reduction become more in line with the comments that your counterpart is making? At what point do we ring that bell and say the long-term structural adjustments have to be made?
Well, you mentioned 8.5%. Part of that is cyclical, and part of that could be addressed by having the economy recover. Part of it is structural. In other words, it's not going to be better once the economy gets back to full employment. So I think you have to pay attention to the recovery in the very short run. You can't ignore that. But it's important to create a credible plan for long-run sustainability as soon as possible, and that would remove a risk to our economy.
I agree, but to the extent that you explain this to the public and explain it loudly and more demonstrably, I think that they could then understand the need for the structural reforms. At this point, I don't think it's understood.